Okay, I think we're live now. Let me just double check as always. Ba-ba-da-ba-da-ba-ba. Yep, we are live. So as always, ladies and gentlemen, welcome to the new live stream in Forex Online. You know, as every Wednesday, we're going to be backtesting some trading strategies out, some Q&A sessions if you have any questions. And as always, we are going to just be rolling around here an hour and a half, more or less, and just having some fun. As always, backtesting, you know, I love backtesting. So at the end of the day, it's a win-win because I have my nice enjoyment. And always you can have your questions replied and all that. And as well, stay tuned because in, I would say 2 hours and a half, there's something exciting coming to Forex Online to this YouTube channel. So stay tuned and subscribe to the channel because it's going to be amazing. So what I'm going to do today is basically I'm going to backtest my own trading strategy, okay? And I'm going to do this based on that I want to test it on the Nasdaq, okay? Normally my trading strategy is based on the pound against the dollar and on the US 500, okay, the S&P 500. And obviously I want to see how it performs on Nasdaq, and the best way of doing this obviously is doing a nice backtest. So this is the idea that I've got for today. Basically I want to try out and see how it performs during 2025 and maybe touch some 2026. Just now we're going to start on May of 2025. And I want to see how it performs because at the end of the day I think it can do well, because based on my trading strategy, it's based on volume. Okay, I need a large amount of volume. So this is why I think Nasdaq can fit in quite well. But as well, we need to see the downside of this because at the end of the day, Nasdaq has got high volatility, but as well, this high volatility can affect me negatively. So how are we going to enter the market? This is not my exact trading strategy. Okay, it's a variation, obviously, to adapt to the NQ sessions, to NQ markets. And it's basically what I'm going to do is I'm going to wait to 2 o'clock, okay, in the afternoon. In this case, for me, London time zone. As normally it would be for anybody that lives in New York. I think it would be at 9 o'clock, okay, because at 9:30 is when normally everything opens, and it's when we get the most volatility. And I want to be there just a bit before to see if I can get this these trades in. So basically, you can see I've already marked out my round numbers. In this case, these round numbers are every 100 points, or one, let's say from 21,400 to 21,500 as a reference. And what I'm going to do is basically I'm going to wait for the breakout of these round numbers, expecting to reach the next round number. So this is more or less a general idea that I've got at the moment. Just so you can get a few examples here. But what I'm going to do is I'm going to look the last round number that has been touched, in this case before my trading session opens, in this case 2 o'clock. I'm going to look that this is the last round number touch, so I'm going to wait either an explosive moment above this round number or below this round number. In case it happens like it happened here, what I'm going to do is I'm going to add a sell stop just here below, okay, with my stop loss just here above and my take profit just here below, okay, so risk reward of 1-to-1. And if it comes against me, I'm thinking of adding some type of edge to actually enter a second trade, but I'll have to see how this works out, obviously through the backtest. First I want to try out just like this to see how it works, but this is a general idea. Just wait for 2 o'clock and then wait for the break. You'll be able to see it's really simple, but it's quite effective to be honest. Same happens here. This is around last round number that actually been touched. It didn't manage to get to this one here above. So I'm going to be placing my sell stop right here below, and you see the price reached my take profit and then bashed up again. I'm in the 15-minute time frame for no reason, to be honest. I'm just in the 15-minute time frame because it's quick and simple and easy. I can do it in any time frame. I could even do it without any type of time frame. At the end of the day, my general idea is just to follow the price, so I don't need to be in any time frame at all. I can be in 1 minute or 4 hours. It doesn't make any difference. So let's hop straight to my next trading session. I think I've got it prepared here. Let me just, no, I need to just modify this here. So this custom session is for the NQ, so I just had this here, NQ, and we'll be sitting at 2 o'clock, so it should be, there we go. And I would say this session shouldn't be longer than the rollover, to be honest, so probably since 2 o'clock to more or less 9 o'clock. I think that would be the waiting time that we need. Obviously, we're not going to be waiting so long for the entry to happen, because at the end of the day, at 2:30 is when it all explodes. So I'm going to jump to my session, and I can see that this is the last round the number touched. So now we just need to wait to see what is if it breaks here below or it breaks here above. Okay, it breaks above. So let's enter a buy position there with our stop, placing that there, and we're going to enter just with one contract, and the stop loss is going to be just here below. So it'll be below this level there. And the take profit is going to be just here, just below this level here. So $2,000 stop loss to nearly $2,000 in terms of take profit. I'm on a 100,000 account, obviously, because otherwise it would be it's crazy to actually do this. In terms of with a what 10,000 account. Let's see how this one turns out. Okay, it's that's a shame. This is why I always tend to close my take profits manually when it's coming near my actually take profit, because this can take to actually a stop loss. I've seen this happen so many times. This is why I always close them manually when it hits here. But normally in backtest, I tend to do it as the worst case scenario, to see if it actually still is profitable. In this case, we could see as well that we could have entered a sell position here, but this could actually come to the stop loss here. It looks like it might do. No, it would have come to a rollover before, but it still would have ended with a loss. So hey, the thing is, we just need to hope now to the next day. And you see the trading strategy that I tend to use is really simple, just one trade a day to avoid any major issue. And what I'm looking at right at the moment is this is the last round number that's actually been touched. So we'll be looking at breakout here or breakout down here below. So let's see what happens first. There we go. This would be an instant stop loss. And this is why I mentioned before that the volatility in NQ can be quite bad for my trading style, especially because of this type of things. As you can see, even if I would have added now a hedge here, in this case the hedge would have worked out perfectly, and I would have left the day in break even. So that could be, like I say, it could be an idea depending on what asset I'm trading on. I use a hedge or not. In any case, the way I tend to use it is on the S&P 500, and it's where it's worked best for me. It's where I've been profitable in, and it's where I've got more confidence in at the end of the day. But obviously I want to try it in the NQ, because maybe it can give me as well a good win rate, a good profit factor. And if it does, then I can actually say, okay, when the S&P 500 is having a weird day or it's been really expensive before this opening, I can expect more a rangy movement, and that's not very good. But maybe in the NQ, I'm having a more range movement before the actual opening, and then I can actually take this explosive movement. So that's the general idea why I'm actually doing the backtest. So I think it can be quite fun. Just now, this is the last round number that's been touched. So I haven't seen any breakouts yet, and it looks like we might. Oh, wait a minute. Hold on here, because it actually would have hit another stop loss. So placing the order just here above, and as we saw, this one would hit stop loss as well. And maybe with hedge movement, would it actually give them any good results? Nope, that would have hit the stop loss as well, so it would have been a double stop loss. That's why we got to backtest it and see when we actually get a good scenario and when not. But in any case, I think it's good to test it out. Maybe it doesn't work in NQ. It could be that this system doesn't work in Q, or I need to change the hours, maybe an hour before, an hour after, or whatever. So it's just a question of seeing when it makes sense. Okay, this day must have been not a trading day. Let's hop to the next one. Here we can see a quite expensive movement, so maybe it starts to turn it into a range. Okay, and nearly did the breakout here, but it didn't do it. And here's a breakout, and this is a movement that I actually expect to happen. Okay, this is how it most of the times it tends to happen in the S&P 500. It just breaks through the round number, and that's it. So it's really simple. But obviously we need to find the correct round numbers. We need to find the correct time and everything for everything to match and work. In this case, I'm just trying out these numbers. I haven't actually done a backtest on these exact round numbers before. Maybe I have to shorten them to half. Maybe I need to make them any bigger, or maybe it just doesn't work. But we'll see that all at the end of the backtest. So here, quick take profit that we've taken there. So we just hop to the next session to see if it gets any better. Okay, this is the last round number that's been touched, so we're looking maybe for a breakout here below or above. Okay, starting to get some rangy day, and there we get the breakout. here I must admit that I wouldn't be live trading here anymore because we're sitting already at 6:30 in the afternoon for me, and obviously this is too much in the afternoon for me to feel comfortable to trade. But obviously I'm going to take a trade to see how the outperform would get. We might even just end come into a rollover, or hit a take profit, it's a stop loss. At the end of the day, it's just something we need to see, and there we go, hit take profit just before the rollover. So it's interesting to see that it's even worked after this this comfort zone that I have. That I normally like to have the trade in the first hour, I would say. That's where I feel comfortable. So this is a rational number. There we go. Have the break. We have the breakout on the downside. So let's see where this trade takes us. As you can see, it sounds funny, but for me, this type of trading style is the one that's been giving me the most profits. Here, if we would added an edge, would have hit stop loss as well. So it would have been 2 stop loss in the day, and that obviously isn't very good. You can see here now it finally came down. As well, I've seen a lot of strategies this sort of type, and adding some type of martingale with the edge and things like that. It's not bad at all. It's work. It can be quite interesting, but obviously we need to test everything out, because for a strategy to be actually a martingale trading strategy doesn't mean it's a bad one. It just means that's the way it's trading. Okay, it doesn't mean it's a bad one. It just means that it needs testing, and if it works, then hey, why not to use it if you have your risk limits? Because at the end of the day, if you use a martingale trading strategy, a hedge trading strategy, or anything like that without any type of limits, that's when it completely blows your account. But if you're using it with your limits and not disrespecting these limits that you put in, then it's like any other trading strategy that you've got your risk limit. You say, okay, well, if I get to this, I'm going to leave the market, and that's completely fine. And that is actually, you can quantify that in terms of that you don't go crazy and you don't blow your account in one day. Obviously, if you don't use any type of risk, then that's where the problems come. And here is the actual breakout. So let's place our order at this place here. I don't like it when it's been previously so expensive, but it is what it is. That's when we need to take it. That's why we're backtesting it, to see how it works and what scenarios we can actually take advantage of. Here you can see as well, it came really close to the take profit, and it finally dropped down. As always, I take my take profits before it actually hits the zone. It's something I've always done, and it's based on especially this. In any case, if we would have taken another edge, we could be able to see that would have been negative. So something that we need to think about, that it's not the best idea as well. Another thing that pops into my head right at the moment by saying this is that I've seen a few times that we could even take two trades but in the same direction, entering this one here, and if it comes down here, enter another trade to buy. This could be another idea that I'll put down and in my notes to see if it's actually, if it makes any sense in terms of numbers. It's another idea that's just popped in my head, because the first trades that I'm taking now aren't being the best trades. Obviously, it doesn't mean that it's a bad strategy or a good strategy. It just means it is what it is. But it's interesting in any case. So we'll be entering a buy at this line there. Let's see how this one performs. But even if it stays at a break-even situation or something like that, it can be interesting. Okay, that is a rollover, isn't it? Yeah, that's a rollover just there. So we'll be closing the trade more or less there. Took some ticks there, so that's fine. It's not a loss, so anything that's not a loss with a break even is some good news, so no problem at all. Let's come to the next one. And let's see, okay, that's what we're looking for, this breakout here. So we'll be entering basically a short position over there. It's not looking okay. That looks better. As you can see, it always comes so close to the actual take profit, and it springs off again. And that's why I always take my take profits manually. I tend to do it even once it's gone through half of the take profit. I start to look for reversal signals in terms of in the 1 minute candle. Then the 1 minute candle will come in handy. But I can sort of see signs of the price like starting to wedge a bit, getting smaller, or when it gets really nervous and the candle starts bouncing up and down, up and down. That's sort of a sign that it could start creating some reversals, and when it starts moving up, I tend to leave the position, because I've seen this happen so many times in the S&P 500. that is just coming in. I've got into the habit of just closing the positions when I actually see the price is starting to revert. Obviously, it's not the best way of leaving the trades, because sometimes I leave money on the table, but it's how I actually feel comfortable trading. And at the end of the day, I think feeling comfortable for me is the key to actually be consistent and be profitable in the market. So that's more or less how I do it. I mean, I'd love to know your opinion in the comments, how you manage your trades when they start to not go as you would like to, or when you start seeing things that go weird. Here you can see as well, so close to the take profit, and it looks like it's going to come to the stop loss. Well, in this case, it's come to a rollover. But that's what I mean. Why am I going to risk this take profit that is maybe 10% less of than my stop loss? Why am I going to risk all that money just to get to 10% more when I can leave here in profits and I've finished my trading day at 5 o'clock when I've only been started at 2, so it's only been 3 hours. At the end of the day, that's how I see it. And as well, on top of that, we can add a time limit to actually sort of say, okay, this is when I am going to leave the trades. We'll be able to see this in the actual analytics. With the exit optimizer, we'll be able to see what will be probably the best time to actually leave this these trades. Okay, we just knock off the stop loss and take profit. We'll be able to see how this would perform depending on how long we leave the trades running. In this case, obviously, it's not finding a good time, but at the same time, we're only talking about 12 trades that we made. So at the end of the day, there's no biggie there. But that's more or less a general idea that I've got. See if I can get anything good out of it. Maybe I can. At the end of the day, I've backtested so many trading strategies that don't come out in a good way. At the end of the day, it's just something that we need to try and backtest until we hit a good trading strategy, and then try to optimize it in the best way. And that's it. I mean, that's what's trading about, to be honest. Okay, so rollover, more or less here. $100 in profit, right? I'm not mad on that. In this case, we are sitting just now on a -8%, so this is not looking good, at least for this this month. Sorry, I said I started in May, but I started in January. First month of January of 2025. But hey, it is what it is. We just need to see how it turns out. It can be just an underwater variation of the trading strategy, so nothing to worry about. Okay, there we've got our entry. Let's see if it actually hits the take profit. It looks like it came out with quite a lot of power. Same, it came to half of this movement, and with the rollover, it actually closed and take profit. So that's completely fine, no problem with that. Just hop to the next trade. Doubts drive me really uncomfortable, so I prefer to know exactly the conditions for exit in advance. 100%, and that's 100% valid, Maya. I mean, everybody has got a different way of seeing their exits. Me personally, I like to be my exit most of the times fixed but flexible, in terms of if I start to see the market doing some type of movement or things like that I don't like, I prefer to be able to exit and not feeling bad like I've broken my trading plan. That's why I've got it included in my trading plan, that I can leave the market in that sort of type of conditions, because it's just something that I don't like, in terms of it has to be 100% fixed. Because for me, in my trading style, it just doesn't fit in well. It fits better that I can actually leave the market when I feel comfortable about it. And at the end of the day, when the price is averaging so close of my take profit, yeah, the odds of actually taking the take profit are really high, because obviously the distance that it needs to move isn't big. But on another side, I've seen it happen so many times that it bounces off when it's so near the level that I just don't feel comfortable leaving a position open when it's so close. I just prefer to leave it and leave with 80% of my take profit, and I'm happy with that. And that's what kept that slight change is what's kept me more consistent than just 100% focusing on one single take profit level and just sticking with that and just leaving it like that. After all, we seek for comfortable, and the definition of comfort may be different. Yeah, 100%, 100% may. I mean, like I say, trading is it's different for everybody. It's different for everybody. Obviously, there's things that, oh, that's a nice take profit that we got there. For everybody, there's a different way to manage achieve what we want to achieve, and that's as simple as that. For me, it's comfortable doing it this way. For you, it can be comfortable doing it another way. But at the end of the day, the most important is that we all share the same way of optimizing and finding our trading strategy. I think that should be the same for everybody in terms of backtesting, optimizing, and all that. But then we give our slight of discretional note on what we're doing, on how we feel more comfortable, what we feel comfortable doing, and I think that's the best way of actually being profitable. Because if we start trading in a way that we don't feel comfortable, that we don't like to do it, then what is the difference of having a regular job if we're doing something that we're not feel comfortable doing? So at the end of the day, I think that's the best idea. And here we would hit the stop loss, and with an edge, it would have worked out quite well. So that's not bad at all. Another take profit we could have taken in the edge, but there's still more cases where the take profit, the edge would have hit stop loss. So that's something we need to take in care. Open the window a little bit. I don't know you guys, but I am steaming in heat. Okay, so break here or break here. Let's see what happens first. Okay, break on the downside. And funnily enough, the volatility that I thought would be beneficial for this trading strategy is going against me, to be honest. Because it's got this type of volatility that is just going everywhere at the same time, and that is actually being not as good for the system. But in any case, we'll need to see how it performs after a couple of trades. Obviously, this backtest is probably I'm going to overextend it more beyond the actual live stream, because at the end of the day, it's something I'm doing for myself as well, and it's not just for entertainment. So I'll probably extend it until the end of 2026 and see the results and see what I can actually optimize. But in any case, I'm going to take a buy just at this position there. And we can see how this stop loss was taken, and with an edge, it would have taken us to break even, so we wouldn't have lost in the day. So it's starting to get to more or less 50-50 in terms of the taking an edge position. So it could be interesting. In any case, we'll see that more or less at the end of the backtest, see if it's a good idea or not. In any case, we need to backtest it to see the actual results. Here you can see another hedge would have been a good idea. After as well, we could saw that it got to 50% of the take profit and it reversed back in. So even just bringing it to break even maybe, or whatever, could be a good idea as well. But in any case, I'll see that in the future. So let's hop to next trading day. Okay, so where's the market sitting? Okay, we had a massive gap, that's why. Okay, so looks like we're breaking up, so we're going to enter some buys at this position there. Let's see what happens. Okay, straight stop loss and a double stop loss if we would have had a hedge as well, really close to the take profit. As you can see, there's so many times with this trading strategy, it just comes so close to the take profits, and then it finally takes off and goes the opposite. So in that sense, taking take profits earlier can be beneficial. Okay, this one it didn't actually cross, so this is the last one, so we'll be entering a buy position up there. Okay, let's see how it goes. Right at the moment, we're sitting on a minus 10%, so not looking good for this first month. But obviously, it doesn't mean it's going to be always like this. It just can be a negative variation, or it can just be that the trading strategy isn't performing as it should, and we need to change and add some variations. Okay, we have a buy here above. What I love with this trading strategy is just it's so simple that you don't have to think too much about it. You only need to think about the exit when it comes close to the take profit, and that's it. You don't actually need to think about too much of the bias, of if it's bullish, if it's bearish, if it knocked off here, knocked off there. It's just you got your levels and you just wait for the breakout. I mean, that for me is a big relief in terms of having to brainstorm every trade and all that. Okay, session has come to the end, so we're not entering any trade this day. But hey, the rest of the days we've had a trade, or at least one trade a day. So that's in that sense, in terms of trade, how many trades, that is looking all right. Okay, what I need to see is what level did it touch before? Okay, well, I guess I'll have to place this live and see which one it touched first to see which is the last one touched. So, okay, touch the bottom level. So this level here is the one that we're going to use. Hi there, mate. Hi, P. Duco. I hope I spelled it right. So we said this one, so just let me draw a horizontal line just on this level there, just to know that that is the last level that it touched. So we'll be looking probably for buys. What time is it? Yeah, we'll be looking for buys. Yeah. Correct. Correct. Let's see how this one turns out. Big stop loss there with a hedge. Would have hit take profit, would have stayed a break even. So something else we need to think about. Well, I mean, I can see it at 50-50, so it could be beneficial or it couldn't. Can depend as well on the volatility of the day, but obviously that's something that we can't just decide on what volatility we're going to have today, because that depends on the market, doesn't depend on us. So not something that we can actually metrify at the moment, but I'll definitely probably do another back test, just testing that out to see if it actually gives us any good results. Okay, really close to take profit, and will it roll over first? Again, same scenario, it comes so close to the take profit and then it finally draws back down. It's been like 4 or 5 times that this has happened now. So definitely closing a bit early is a good idea, especially if we see this type of wicks even in 50-minute. I mean, it's something that it just makes sense. Just makes sense to not leave. Ah, shit, I didn't, my bad. I didn't close the position here on the rollover, so it would be there. That would be the close of the position just on the rollover, and now we need to hop to the next session. So where are you guys watching the stream from? I'd love to know where you are from. Okay, we have a buy. Wait, because maybe we have a, no, price can't be on. We have a buy. Oh yeah, I'd love to know where you guys are from. Okay, it's just opened. Came to 50% again, coming down, not making up its mind, and closing in the rollover just for a slight profit of $160. That is really its break even, so no biggie on that side. Massive movement on the downside just before we start trading, so this could be a rangy day. And this actually broke through, so we will be entering a buy position there, and unfortunately we'll be probably hitting the stop loss exactly, and we would have hit a double stop loss with this with the hedge if we would have added it. And if we would have placed the actual opening position just slightly above the round number, would have hit a take profit. Would have hit a take profit. So, a few things that I need to take note of. Take profits early, just a bit early. Oh, Germany, great. I lived there when I was small. And I think from 2 to 4 years, I think it was. I lived in Germany when I was 3 to 4 years old. I lived there for 2 years before actually coming to Spain. Okay, so like I said, a small recap on things that we need to think about right at the moment. Closing the trades just a bit earlier of the actual level. We need to metrify, see how much we can actually shorten that or leave it as a discretional note. And on top of that, placing the orders a few ticks above the actual level, maybe I'd say 5 ticks. something like that. And we still need to identify if the actual hedge would make any sense, but I think that the only way to actually see that is doing another backtest and comparing one on the other to actually see if it actually makes sense as well. In a good thing that in Analytics Insight we'll be able to see if taking more than one trade a day actually affects negatively our trading strategy. So that would be something that we'll need to look at. In any case, what we're going to do is actually, yeah, it did touch this one, so we're not going to play the breakout on this one. We're going to wait a breakout on this level there. So let's place our order just here, and let's see how this one turns out. Okay, hit the stop loss. Would have hit a double stop loss with the hedge. So right at the moment, the hedge, it's not my favorite. I do use it sometimes in the S&P 500, depending on the amount of volume that I can see in the market, and if there's been a lot of news release or anything like that, can give it more volume and more idea. Even if I see a really strong trend to one side, I do sometimes use it. Not always, because it doesn't always turn in well, and it can wipe out a lot of profits. Because if I get 2 days with a double stop loss, I can wipe out 4 days, sometimes even 5 of commissions, 5 profitable days. So that doesn't make much sense to do it all the time, but sometimes it does come out in handy, especially to recover some type of drawdowns or things like that. But like I say, that all depends on what we're doing, on how we're trading once it's doing and all that. So not something I can just quantify right at the moment, but in any case, we can see here, perfect, we have 69 ticks there, so $300 profit. Nothing massive, nothing impressive, and just now we're still sitting on a minus 12% drawdown. Good thing is we're learning a lot. We can see when the opportunities are turning in healthy, and as well we can actually see what works and what doesn't. In this case, we can see that it's not going to be a trading day, so we just hop to the next day. And right now we're actually through February of 2025, so nearly 2 months of trading, so that's not looking bad at all. And I think it's been a positive backtesting day. Just had our sell position there. Perfect. There we go. Whoa. See, that's what I mean. I mean, look at that. I mean, who doesn't close before? I mean, when I've seen this happen so many times, and this happens exactly on the S&P 500, but literally exactly the same. When it comes so close, it blinks up and it doesn't actually touch the round number. And that's why I close the trades early. I mean, I've mentioned it in a few streams why I always close trades early, but now I can actually show you exactly why. I think it's I mean, who wouldn't do it? I mean, a lot of times I could even be looking at a close just here, to be honest. But it depends on how I see the market. I mean, sometimes if I've been had a really good trading month, I can just leave it go because I can actually risk a little bit. But most of the times, I just prefer to leave with some money than leaving with a loss. Obviously, it's not good to do that always. For obvious reasons, you complete the actual trading plan. But if it's included in your trading plan, for me, it's no big problem. But yeah, okay. Let's see. Okay, let's remember touch. Is that? It looks like we might get a breakout on the bottom. Perfect. There we got a breakout. We can see it's instant take profit. Oh, that's fine. As well, something that I haven't been looking at, but maybe a high risk reward could be a good idea. I don't know. Because on good days like this, where we get instant take profits, you can still see the price actually retraced and wouldn't have gone any further in. So maybe just a 1 hour risk reward is okay. Maybe we could actually reduce the stop loss by using different round numbers. That'd be something as well that we could actually look at. So obviously with smaller round numbers, we've got more opportunities for breakouts, and we just need to see if these retracements don't affect us as much. I think that's the major issue that we need to find on that one. Okay, that's not looking bad. Perfect. No take profit. And this time, does it come any lower? Yes, it does. Yes, it does. Yes, it does. Okay, these are the days that obviously would make a massive difference in terms of profits. But obviously this doesn't happen every day. And if for any reason you get stuck driving, or you need to be somewhere or anything like that, and you lose this trading day, that's when the big risk reward tends to fuck up everything. Because maybe one day you can't be trading because anything, you've had any problems or anything like that, and you can't trade, and that exact day tends to be the day where you get the perfect trade set up. So yeah, any case, let's see what other trades we get here. The round number, yep, get a breakout on the downside, so let's add our sell position there. And oh, that could have been an instant stop loss. Nearly. Fortunately, it touched first up here before it actually came down. But that could have been an instant stop loss there, to be honest. But hey, not looking bad. Does it go any lower? Yes, it does. 2R. Any lower than 2R? Yeah, it does, but after the rollover, so not too worried about that. We're starting to recover a bit this drawdown. We were on a minus 12%. Now we're sitting back on a 7.6%, so that's completely fine. Completely fine, quite natural movement. At the end of the day, we are risking a 2% per trade, so 12% would be like a 6%. Sitting on, if we'd just be trading 1%, then we've got a nice sell. Looks like it's going to hit take profit. Yes, it does. I would have closed here on this wick here, just to let everybody know. And there we've got these explosive movements. These are the ones that I'm looking at in terms of it could be a good asset for my trading strategy. But I must admit, in the S&P 500, it doesn't happen so strong, so instant, but it's more reliable. In the Nasdaq, I feel that movements are really spiky, a lot more, bigger spikes, and I have less confidence in that this movement can hold any longer. Obviously, we've got on the top side that as it's a really strong movement, we can have the chance of it hitting our take profit instantly. But on the other side, we have the odds as well that it can literally come near and spike up again. So at the moment, not bad. 6% drawdown isn't any major issue for me either, so I'm not worried about that. If it would come to 20% drawdown or something like that, then I would start considering, hey, I'm probably wasting my time backtesting this. I need to do some changes. But right at the moment, it's looking quite natural. A hedge position where if it take profit there, so we can take in consideration as well. So yeah, not looking bad. We have a sell position there. See how this one takes out. Big nice candle. Another big nice candle, hit take profit, and broke a few more levels. We could have got 1, 2, 3 risk reward there. 3R, does it go any lower? It does. Wow, it does. Been a massive risk reward. Another thing that I used to do with this type of model of trading strategy was actually bringing the stop loss behind each round number. Problem is that on Nasdaq especially, we have these type of pullbacks that are big pullbacks, and can hit the stop loss and continue down. So I don't think that's the best idea for at least this trading strategy, to be honest. Well, let's see. Okay, we have a sell position there. Spiked straight up and hit our stop loss. And with a hedge position, we will have hit take profit. Okay. All good information. All good information. Do we have a breakout? Actually, what did we actually go through this level? We actually did. So this is the last level touched. So we're not looking at any breakouts there, my friend. But we do have a breakout here down below. And does this happen before or after? Let's see. Okay, perfect. That's everything I need to know. There we go. Do we hit take profit? Yes, we do. Okay. So we're sitting right at the moment at a -6%. A lot of people think -6% is a disaster, but to be honest, for me, it's doing quite well. It's doing quite well. We just need to see if we can improve it to actually get some better results. I think we could, and I think we can find this a nice sweet spot for this system, to be honest. So okay, let's jump to the next one. Starting the third month of 2025. Had quite a lot of trades, to be honest. 38 trades, virtually every, only missed 2 days. So to be honest, that's not bad at all. Does the exit optimizer tell me anything interesting? It does, definitely. We can see that the average is actually 400 ticks. The optimizer would be 1,300. That would be massive stop loss. So this would be infinite, and the max holding duration 9 hours. I don't know if that would be the best idea. I prefer to bring take profit somewhere near to maybe a 1-to-1. That doesn't look bad, and maybe bring the max holding duration to, yeah, I would say 4 hours. Oh, it's not a bad setup, this one. It would be a 10% in 3 months. It's not bad. So it could be interesting. Could be something interesting to look at. And is this an entry? Yes, it is an entry. Let's place our sell position here. Yeah, why not? Why not? Let's see if this one turns out well. The good thing is I'm seeing that there's no major variation in terms of losing trades. In terms of, like, we're not getting a lot of streaks of losing trades. We are obviously in a drawdown, and this isn't positive, but it's not negative in terms of we're not having vast amounts of losing trades in a row. We're having more or less winning, losing, winning, losing. That's more or less what I was expecting. Obviously, with this first backtest, I don't know exactly how it's going to perform. Not entering here because this was last number touched, so I'll be looking at breakout at this one here above. So there we go. Let's place that there. And this one, it seemed like it went up, but I don't know if it actually managed to. Yeah, it did. Perfect. I'll take profit that we hit there. And we can see we're now at a -4%, so we are starting to recover. We were in a -12. That was quite big. So in any case, it's not looking bad. And this, yeah, we'll have a buy position here above. Instantly hit stop loss. Do we have any hedge that could be useful? Yeah, we do. So again, I would say it's sitting on a 50-50. So I don't know if it would actually make any improvements, but it wouldn't make it worse either. So it's something that we could add in a discretional way. So that's not bad at all. Okay, we can see we have some type of rollover happening here. So we need to change the indicator for it to match. There we go. Perfect. So last round number touched. We're getting breakouts. We do get breakouts. We can see we have a really bearish momentum at the moment. So I'd also stop there. Oh, that's nasty. Now it comes to take profit, doesn't it? Oh yeah, that's nasty. That is nasty, boy. Okay, another thing that we need to think about. Placing a stop loss just slightly above the level. Perfect. Actually, a lot of points to improve that I'm seeing, I actually do it already in S&P 500. I'm especially placing the stop loss a few ticks above, placing the entry a few ticks above or below, and shortening a bit the take profit. My risk reward isn't exact risk reward of 1-to-1 after adding these modifications. It's more like 0.8 to 1 after adding a bit of distance on each level. But to be honest, just these slight changes are the ones that have improved the most, especially the actual risk reward and all that. So it didn't touch this level. So we are sitting with this level here, and what's the next level touching? Okay, it's a breakout on above. So that's what we're going to be entering. So let's place our buy order up here. And let's see what it gives out. Instant stop loss. Hedge would have given the take profit. So that's something interesting that we can think about. Okay, last round number touched. Yeah, I guess it is a buy. I guess it is a buy. And instant stop loss maybe? Maybe not. Yeah, instant stop loss. Perfect. It is what it is. It is what it is. Coming back to the minus 12%. So not looking good. Not looking good, but at the end of the day, it needs optimizing. And adding these slight changes in terms of putting the stop loss a bit above or below, take profit, shorten it in a bit and all that. I think it will be the best thing we can actually do to this trading strategy. So it's definitely something that I'm going to test out and see how it actually improves. I think it will improve quite a lot. We'll have a look as well at Analytics Insight when we've got a few more trades done. Instant stop loss, hedge would have worked out well, so it's interesting. Okay, there we have our sell position. Like that. All right. Hedge would have hit take profit, so it would have been another break-even day. Well, not a complete break-even. It would be more looking at 0.2%, 0.1% loss. If we take in consideration like all the commissions and that we don't have a one-to-one exact risk reward. So yeah, we have a sell position there. See how this turns out. Okay, let's place the order. Just now we're having a quite big drawdown, to be honest. And there we go. Hedge again would have left us with a break even. So the actual hedging is starting to get more important than just leaving a single trade. I must say that we're getting more hedge situations that turn out good, and they are turning out bad. Obviously, I'm not quantifying them. It's just checking on and seeing if it makes sense. But definitely it is making sense right at the moment. In this case, we would be leaving on a rollover here on this second trade, so we're just taking one loss there. It's completely fine. Would have been, it went quite close to the take profit there, but it didn't actually hit it. Okay, there we go. There we got our entry. Maybe it could be as well that we should just change around numbers. Maybe add them slightly smaller. I mean, at the end of the day, this is a massive round number situation. There's quite a big distance between one and the other, and maybe just bringing it to half could be interesting. Something we might have to think about in when I optimize the trading strategy. So yeah. Okay, we have another buy position here above. Perfect. Take profit. Finally. We did need this take profit. I mean, just now we're sitting on a minus 20%. So to be honest, we do need to adjust some things here. Right? I mean, we are minus 20% with a 2% risk on each trade. So it's not like we got a 20% with a 1% risk trade. So it's not so bad, but it is quite high. To be honest, it's quite high, and I think I need to add some type of adjustments ones that we mentioned, definitely in terms of closing the trades a bit earlier. I think that could give us a good outcome. And as well, changing these round numbers might be an idea. And maybe the Nasdaq isn't the best asset for this trading strategy. I mean, that could be as simple as that as well. Because at the end of the day, not every strategy matches every asset. And just because it moves with a lot of volatility at a certain time of the day, like it's at the open, New York Open, in this case the stocks open, it doesn't mean it's got to be good or bad. I mean, it should be good in terms of that's how my trading strategy works best when we've got a lot of volatility on the opening. But obviously it depends on what type of volatility we're looking at. Some volatility isn't as good, and this one, it's more as this type of volatility that isn't as good because it goes everywhere and it tends to spike up and down. Here we could even approach a different trading style. Instead of looking for breakouts, we could look at bounces. I know somebody that trades a lot of bounces on the Nasdaq, especially on this type of time. So that couldn't be a bad idea as well to test it out and see more or less how it moves on, how it performs. But in any case, we'll see. We'll see. So, do we have a breakout on the top side? Yes, we do. And just out of finishing time, 8 o'clock. So that is too late to enter a trade, but in any case, we'll take it. See how it performs. It's probably going to stay at a rollover. Exactly. We got the rollover. So, hey, $440. Definitely doesn't look big when we look at a $22,000 drawdown, but hey, it is what it is. It is what it is. That's why, ladies and gentlemen, we need to backtest. We need to test things out. Otherwise, if we trade blindly, you're going to have a big debt. 100%. I don't like this candle. Okay. I didn't like how normally when I see this candle, the next candle is a big green candle going up. That's a normal trading pattern that I tend to see after seeing this type of candles after a massive dropping or rising candle. In any case, we take profit there. But looking at the variation that we're having, I can't see recovering this drawdown soon. That's the only issue that I'm seeing right at the moment. Obviously, if we keep trading, it can, and maybe it was just a one-off drawdown that the strategy had, but I don't think so. I think we need to do some refinements on there. Ooh, that was close there. That was close. But we can see a lot of bounces off, and we could look for some type of confirmations on the round numbers. These round numbers, if we leave them like that, we could look for some bounces. Because as you can see, the price reacts really nice to them. And I mean, it doesn't have to be a bounce to the next level. It could be bounces like just to half of the level or something like that. Could be interesting. Okay, we have a direct take profit there. I think nobody's got any doubts about this one. It's a ooh, it hasn't hit take profit. I bet it goes up. Ooh, that would be funny. That would have been funny. Okay, last round number touched is here, so we have a breakdown on the downside, and we have an instant take profit on this one. So hey, that's good. The thing is that we're not getting enough take profits to actually recover this drawdown we entered at the start of the backtest. And obviously, it's depends as well whenever you start trading. Time to add filters and restart. Yeah, 100%, 100%. I'm looking to. I want to finish March, and I think it's time to actually have a think about how this can actually be improved. So right at the moment, it's saying that the most optimal stop loss is 161 ticks with 2,500 ticks of take profit. I mean, I think that is hilarious. I mean, obviously it's mathematically calculated, so it's not like it's saying out of nowhere. But 100%, I think it's not the best. I think this risk reward is too high, to be honest. Sitting on a 14% win rate as well. I think 200, that would be halfway of our average, wouldn't it? Yeah. Okay, so that's not looking any good either. And what about if we add this take profit and reduce it? No, doesn't make any sense either. So risking half makes sense. Sorry, risking double doesn't make sense in terms of looking for half of the stop loss. Bring the stop loss any higher. Does that make anything? Ignore. No, I don't want to do that. If we click these off, does the max holding duration make any change? No, it doesn't. Well, it does, obviously, but it doesn't. It's not a massive increase. So, I think with the XE optimizer, we're not going to find something, because obviously this trading strategy depends on the round numbers, especially. So it says here, try to improve the strategy core. So definitely things that we need to change is basically placing the stop loss just a bit above. Take profit, I would say, of 80% of the actual original take profit. I think that would be interesting. Placing the order just below or above. That's a general improvement. I mean, I think that's what I do on my strategy on the S&P 500. That's how I'm on Let's Manage It. But what I'm doubting is on the round numbers. I don't know if they're too big. If I bring it to 5, that makes any sense? Or would it just blow anyway? Let's check it out. What I'm looking at the moment is the amount of times the price touches this level and then comes to this level and then goes above and comes down and above and above. That's basically what I'm looking at the moment. And it does bounce off quite a lot. So at the end of the day, I see these levels are a bit short. That's the only concern that I've got, because I know the general settings are going to do an improvement, but I don't know if this improvement is going to be big enough for trading strategy to be as profitable as it is in the S&P 500. So that's why I'm actually checking this out, because the only way that I can actually think about is by doing this. We can obviously see that this movement was massive, but as well, we can't see. We would have to see them live, because this candle could easily come down here and up here in one single candle, and we can't see it because obviously the candle is closed. So I think I'm going to have a deeper think on this one to actually make it, or to see if it's actually profitable. Because I mean, if we've got to add too many filters and do so many things, it wouldn't make too much sense. I think NQ might need some volume rule or filter added. Yeah, that could be a thing as well. But on the other side, I don't know. Because at the end of the day, the volume starts to kick off from more or less 1:30. That is the first New York Open. It'd be 8:30 if I don't remember wrong, in New York. So I don't know if, I mean, at least the normal volume indicator, I don't know if it would give out any good signals. I mean, we could use so where is it? Basically the order flow. We could add the order flow, but obviously to actually use the order flow, we'd have to wait for this breakout to happen and enter once the breakout is finished. So I'll be more short scalping more than actually the breakout that we're actually looking for. I mean, we can check out the signs and see how the candles look out inside once this breakout happens. But I don't see me personally trading this, to be honest. Based on I don't normally use this type of indicators because I'm just used to using my trading strategy in a normal way. So it's a shame because this I really love the actual how this indicator works, but it doesn't match with my trading strategy, to be honest. Well, at least I don't feel comfortable matching them both together. Maybe some of you guys can. I mean, it would be worth looking at in terms of retracements and rejections of the levels. That would be interesting. That would be interesting. You can see there's a lot of volume here after breaking out, and this leaded to coming up to here. But when it came up to here, we can see that the volume decreased completely, and we got more volume on it. Could be an idea for some of you guys to actually test it out. At the end of the day, round numbers is always a place where a lot of volume tends to concentrate. So could be an idea for you if you want to test it out. Me personally, I don't think I'll be using this indicator for this trading strategy because it's, for me, the order flow has always been a one that's for more scalping. Maybe try market profile and see if your levels match poke or something. Yeah, that could be an idea. Let's head them on. Let's try. So let's change these psychological levels over here. Bring it back to 10. That's where they were. In any case as well, the thing is that here we'd need to actually think that we would have to enter on a closed candle. Here we can see there's not a volume sitting on here, but obviously here the volume is taken in a different way. But logically here, you see? Order flow is a bit overwhelming, true. Yeah, no, 100%, 100%. I mean, depending on the trading strategy that we're using, it could be overwhelming or not. But in this case, for these round numbers, to look for the breakouts, I think it could be a bit weird in any case. Here, basically, following this logic, it was not a lot of volume here, so it shouldn't be too much resistance. So maybe it could break through. Does it break through? Is it something we could think about? No. Perfect. Is this case the opposite that I mentioned, said. And here, this level should hold out better because there's more volume. But in this case, it would be the opposite as well. And yeah, exactly. It could be an idea, but at the end of the day, we would need to wait for the candle to close. We would have to select a time frame for this, 1 minute or 5 minute or 15 minute, and based on that, we'd have to see if the candle doesn't move all in one go. It's quite tricky, this one. I didn't think it was going to be so tricky, to be honest, because I thought it was going to have better results. Obviously, I'm used to using it on the S&P 500 and on the pound against the dollar, and there it tends to have better results in terms of having more take profits and stop losses. I mean, my win rate on the S&P 500, if I don't remember wrong, is around 60%. So on this one here, what was the win rate here? It's definitely lower. It's 46%, so that's 14% less of my average win rate using the same mechanic. But I think I'm gonna have to deeper think on this one. I'll probably come up with something over the week and bring it in the next live stream and sort of mention the changes that I've had. So I think that would be the best idea to actually have a proper think and have a proper better conclusion. Right at the moment, the analytics insight unfortunately hasn't got too much to tell me about it, and the exit optimizer, I think it's not so compatible with this strategy because obviously the stop loss is based on the round numbers. We could use a fixed stop loss maybe, a fixed stop loss and disable the take profit. Does it make any sense? No. Why does it? If we use a 7 fixed stop loss, then it makes sense. Obviously, this is not possible with a so small stop loss. It's not possible based on a real market condition, so we couldn't do that. But in any case, I'll have a proper think about it, and I'll probably bring it in the next live stream or in future video. But in any case, I would love to you stay tuned, because in an hour and a half, there's something really interesting coming to the channel, and it brings giveaways. I can say that. So thanks everybody for joining to the live stream. It's really been a pleasure to be here. I must leave right at the moment now because it's really hot right at the moment in the studio. I mean, I've got the window up, but it's so hot. And I want to have a proper think on this one instead of just napping around on things. I want to actually do a proper optimization on this and have a better idea. So I'll probably test this optimization out in the next live stream we do. So stay tuned, subscribe to the channel so you don't miss on that. And like I say, thanks so much for joining. I've had a really good time with you guys. And hey, I'll see you next time.